buy more equities should they weaken further due to external market factors. I think by the end of the year, into next year and beyond, investors may have no real reason to complain, because I do think the economy will do very well. With that, let me once again thank you for your time, and I wish you all the very best for the remainder of the year. Thank you.
Thank you, sir, for your keynote address. Up next on the agenda is the unveiling of the EY Cafe Mutual Being Future Ready report. And for the same, I'd like to invite on stage Murli Balraman, partner EY. Once again on stage, S. Nagnath, President CIO, DSV BlackRock, and Prem Khatri, CEO and co-founder.
Very proud of this moment to be associated with EY for this report. I have seen many industry reports earlier, and with a false sense of pride, I don't know what, but I genuinely believe that this is the first time I have read a report which gave me a good perspective on where the industry was all about. I learned something which was new. I got a refreshing context, and I did get a peep into the future. So very happy to be associated with EY. Very soon you will be getting a copy of, each of you will be getting a copy. And now Murli, I call upon Murli to present the highlights from the report. Over to you, Murli.
Yeah. Good morning, everybody. It's a pleasure to be associated with Cafe Mutual in this August event. It's been a pleasure to kind of, put together something on the mutual fund industry. We believe that it's exciting times, ahead for the industry. There's a lot of buzz that's happening. There's a lot of positive activity that's going on. It's been a learning experience for us, because every time we put through a report, it's not just about, having the data already with us. It's also about going back to the industry, talking to some of the leading industry players, trying to identify what the trends are that are going on in the marketplace, what's exciting them, what are the challenges that they're facing. So it's not about EY putting together a report. It's more about what you are reflecting about yourselves, amongst the community that's there. And hopefully this is a true reflection of, what your thinking is. Just to kind of set context, I think the mutual fund industry in India is still, in its infancy, in relative terms to the West. And if you look at the largest mutual fund industry around the world, which is the US, which has about 51% share of the overall market space around the world. And from a GDP penetration perspective, only 8 to 9% of the AUM, share is there, as part of the GDP percentage in this country, vis-a-vis something like about 40% that exists in Brazil. So there is a far greater opportunity for investment that exists for mutual funds. And being future ready basically means, having much more share of wallet, from retailers and retail, as well as, from the other communities, to kind of participate in this exciting journey. Pretty much, if you look at the industry, there's a huge amount of global optimism that's set in as far as the industry is concerned. There is, just a second, please. If you look at the global scenario, it's moved away from being a very growth-driven piece to being very efficient. So the mantra has moved away from just saying top-line growth to being more efficiency-related growth. Capital preservation is becoming, a very important aspect of it. Investors are becoming far more savvy than, what they were a couple of years back. They are going into value-based investing. They're trying to understand what asset management companies are doing, what's the mix of the portfolio that's there. And then the preference has also been towards looking at equity, in terms of the overall growth perspective. The second thing is that the wealth across the globe is increasing quite dramatically. The emerging markets are playing a very, very significant role. Private wealth is becoming, an extremely important part of this journey. So all of that is, helping the mutual fund industry grow, in the areas that's there. About a third of the total investments on AUM, is now coming in from HNIs and from the affluent segment. And there's still a lot of mileage that, we can exercise, as a team. But it's something, where the growth is definitely there. Retail investments is something that, is a combination of investor education as well as, growing into the other cities that's there. Globally as well, that's been recognized as, one of the growth leaders, across that particular segment. In all of this, the regulator, is bringing in more sanity into this. There's a lot more tighter regulatory landscapes that's starting to build in, as part of the overall growth factor that's happening in the industry. The other piece is that people have realized that costs are going to be extremely important. A lot of the foreign players in the Indian market space, as well as some of the global players, have realized that cost of distribution, cost of management, cost of the overall, the fund balances are going to be extremely important. Now, one of the areas where costs can be managed very well is in technology. And therefore, the use of technology, the use of outsourcing, the use of, shared services, is being looked upon, fairly importantly. Technology is also a disruptor because it's the endpoint where there is a fundamental UI, a user interface that is getting built on, with the end investor. So the end investor is really looking at quick information that can be provided to him, extremely well. So that's another area where, we see that changes will start to happen. So while this is happening, from a global perspective, what we're seeing is that the industry itself, has gone through, a big phase of change. And the big phase of change started, way back when UTI was a sole player to now, where the market has seen about 10 trillion worth of investments, in the form of AUM, and there being a major number of players that are there. And the top 15 players are pretty much, kind of ruling the way the industry direction is really coming about. What we've seen in all of this is SEBI starting to form, a fairly good set of governance principles. We've also started to seeing other players and foreign players enter into the market, look at profitability as being there. If you deep dive into the report, what it starts to talk about is that though the domestic players hold about 2/3 of the market and the foreign players hold about 1/3 of the market, the profit is more 60-40, where the profitability of some of the foreign players is something, which you need to look at, which means that cost efficiencies are getting built in as far as the market is really concerned. So there are some foreign players who have really understood, how the market is going to go and taken advantage of it. Some of the Indian players, the private players are some of the very large AMC players in the marketplace, and they are taking advantage of the entire mutual fund industry and the growth that's there. If you look at key stakeholders, essentially there are three stakeholders. One is AMCs that we spoke about in great amount of detail. The second one is the distributors, and this is actually, where some of the underlying cost assumptions start to play a significant role. If you look at distributors, they are playing the role of a trusted advisor. A lot of the investor education is being brought about, at the end point of distribution, and therefore the role that they will seek to play, as trusted advisors to build a sustainable business model is going to be very important. Now, in all of this, since the regulation is coming on the other side, there are stresses that happen between the distributor and the end investor, and the regulator has a balancing act to play between the distributor and the end investor. The investor is becoming far more savvy. He has preferences. His current preferences, if you look at asset classes, has always been in physical assets, which is slowly moving towards the financial assets, driving to standards of performance. He's moving from tangible forms of money to intangible forms of money that's coming in. Technology is playing a significant role. Handhelds and mobiles have become a significant player in the ecosystem of his decision making, and therefore the fact that there is a large availability of varied investment products, from some of the fund houses is really bringing in a multitude of choices as far as the investors is concerned. 3-4 years earlier, ETFs were an unknown commodity, and today, you're starting to talk about ETFs, as being one of the drivers, for some of the investment norms. It's still nascent times, but you're seeing a change in investor perceptibility. If you look at it, even from the profitability perspective, and you look at the top 5 AMCs, which are doing extremely, extremely well, there you see that the margin, the revenue margin, the profit margins have significantly increased at about over 10%. The global market is growing possibly at around 8-odd%. So we're doing far better than what global averages are. In terms of operating costs, we managed to keep the non-staff costs, fairly tight. It's declined basically from an increase in scale, more of market uptick, economies of scale, technology, and outsourcing, being some of the levers that have started to come in. And the outperformance, has also happened when the scale starts to happen. And some of the foreign-owned players have understood, this game much better. And therefore, then, they have outperformed some of the domestic peers in terms of some of the benchmarks that is there. If we, go a little bit, into the client service model that's there, just hold on, into the recent trends. If you look at Mumbai as a city, about 42% of the overall, market is being commanded by Mumbai. If you look at the top 5 cities, about 70% of that is being, commanded by the top 5 cities. The next set of 15 cities is where the growth wave is going to take place, right? We've witnessed a 36% year-on-year increase as far as AUMs are concerned, across the next 15 set of cities. We're seeing about 2 trillion, from these places, as of March 2015. It's the first time when the numbers, are significantly starting to change. It'll be an important part of, what is really going on. In all of this, the SEBI mandates that are coming out on an investment into investor awareness is becoming extremely important. There are a number of programs and campaigns that have been, issued for SEBI by SEBI, and SEBI is taking active interest as far as the marketplace is really concerned. Efficiency, as we said at the beginning, is becoming, one of the most important aspects, of the entire driver, and cost. And we've seen this with many players that we interact with, as clients, that they are thinking of costs increasingly, and the way the whole thing is working. If you look at the global model has moved away from a commission-driven model to a part commission and a part revenue-based model, or an income-based model, or a fee-based model. And today, some of the practices that we have in terms of caps on that have been issued on the commission-based model is likely to undergo a change. And that's the trend that we are starting to notice. We've captured some of that in the report as well to reflect, how the changing models are going to adopt. And it's important to align that to make sure that the growth is happening in the right direction. The other piece is when you don't have scale, when you don't have the right distribution model, when you don't have costs that are aligning back to the revenue model that's there, you're going to see a lot of pressure that's going to come about. A lot of the foreign funds that have exited the country have seen some of these, happening as far as their pressures are concerned. The exits have happened, consolidation has happened, and increasingly you will see consolidation wherever you can't take advantage, of the scale and the approach that is there to the market. The market is unique in many respects because, we have a huge number of people and a huge potential that's there. We have a highly unbanked population. There are, almost a dozen payment banks that have come into the country, which is changing the banking landscape. If you look at it, the ecosystem is changing. people are reflecting upon all the players that are there. There are a huge number of AMCs and other players also in the marketplace. So therefore, the market dynamics is changing. So in this market dynamics, it's important to understand what is the role that you will play, and then latch on to the ecosystem. Essentially, you have a huge number of distribution points that are going to increase as a result of some of these ecosystems starting to develop. And the question is, how do you latch on to some of these distribution points? How do you leverage in on the cost? How do you leverage in, on all of what is happening? And in the light of this, there is increase in regulatory capital that's required, increase in the investment that is required from fund houses into individual funds. So therefore, there's a change of dynamics that's also happening. So this balance between profitability, on one side and the investor on the other side is going to start to become critical. So with that in mind, one of the things that we will see that's going to happen is a balance. And that right balance between a distribution-based model as well as an investor interest-based model is becoming extremely critical, as far as the ecosystem is concerned. You would have seen, as I said earlier, United Kingdom and Netherlands, moving onto a fully fee-based model or an advisory-based model. Developed economies are moving to a fee-based model. So that is something that has been set as a precedence. It's not that this model will be completely adapted. There are some countries which have given guidances and principles around which some of this will work around. So we'll have to see and play this in terms of what's happening. What is fundamental and paramount that's emerging is that there is a lack of financial literacy in India. So people don't understand the instruments that they're investing in. People don't understand the approach that is really required towards their own individual investments. And that's why retail investments have not taken on, in the segment to the extent that, we would have liked it to have. So therefore, there's far more calibration that will be required, from players such as yours towards this particular approach. We've tried to capture some of those thoughts as well, as far as the report is concerned. The last part of it is basically the investor perspective. Now, one of the questions that a retail investor asks himself is, what's the best place where I can see safety come about? And gold and real estate has always been a #1 rank because of historical reasons. And he's been always looking at it to say, it's yielded me good returns, on an annualized basis, on a year-on-year basis that's there. However, so has the mutual fund industry, over the last 10 years, compounding itself over 14.5% versus a stock market average of about 11%. So if you really look at it, in terms of apples to apples, there is good growth. But the common man, the common investor may not know about that. And that's the message that you have to start sending to say, what's the average rate of return that comes about? What's the real, value that comes about? The 5 top reasons based on, a survey that was done by Nielsen in 2014 that came about is about a low rate of return, lack of money to invest, which is, the cash flows, the SIP, framework that exists in the country. Third is about the high risk because of the volatility that they see sometimes in the marketplace. The fourth is around the lack of surplus income to invest, at various points in time. And the fifth one, possibly the most important, is the low understanding of the benefits that are associated with a uniform investment, sticking on to a particular fund house and investing over it, over the years. So we've tried to capture different perspectives which are there for all the 3-4 stakeholders, that are there in this report. A lot of insight has come in, from many of you, towards building up this report. A lot of insights have come in, from the market knowledge that we've gained over the years, which we've tried to put into this report. We believe that it'll be an interesting reading for you, to kind of help you in terms of growth of your individual businesses. So this, in effect, was, a very brief summary, of what it is. And we believe that, the report reflects on things like the growth markets, reflects on the disruptions in technology, reflects on smaller AMCs, reflects on the viable business models, and of course, how technology is starting to play a role, in all of this commonality as you go forward. We hope that you find this report interesting. We would request you to come and give us some feedback so that then we can make this report even more enriching as we get into the next edition. Thank you very much.
Thank you, Murli, for helping us unveil our report. And now it's time to take a quick breather. Let's all catch a cup of coffee and meet here again in 15 minutes for our next session.